Today we have Ms. Rachana Bhusari, who is also joining us from National Stock Exchange of India, who is a Vice President, Head Business Development on the listing side. So Rachana is a Vice President who primarily takes care of primary market business development initiatives of NSE for listing of equity as well as debt for corporates, startups, and MSMEs, representing NSE at various committees of SEBI for development of the primary market. She is a postgraduate in financial management and law graduate with nearly 21 years of experience working with NSE. Prior to the current role, she has been responsible for regulatory functions of exchange, namely investigation, surveillance, member supervision, etc. So welcome today, Rachana, for today's webinar. Thank you so much for dedicating time for us.
Thank you, Sunny. Thank you so much. And I would want to applaud the initiative taken today to create more and more awareness about this debt, the alternate asset class that is available. And it's a great initiative and happy to be part of this.
Now, what is the difference between a listed bond and an unlisted bond? It talks for itself, but I'll still explain. Listed bond जो होते हैं, ये एक recognized stock exchange पे listed होते हैं, which is NSE as well as BSE. इसका मतलब ये regulated होती है because NSE and BSE are regulated by SEBI and all listed instruments are regulated by SEBI. This is covered under the issue of listing non-convertible securities regulation 2021. SEBI keeps on updating these regulations so that it is there to protect the investors' interest as well as the issuer's interest. So they are a non-interested invested party. So they are very unbiased and they try to ensure that they protect us. They are a regulator. Let's come to the unlisted securities. Can you trade in unlisted securities? The answer is yes. It's not that unlisted securities cannot be traded. However, two things we need to keep in mind, that these can be traded through over-the-counter market. That's why they are called OTC securities. One thing we need to keep in mind is that this is not regulated by SEBI. However, there is a big market for unlisted securities also, and not like they are not secured or anything, but they are unregulated compared to SEBI. Listed securities are regulated by SEBI under issue and listing of non-convertible securities, regulations 2021, as well as Companies Act. Both the regulations this is governed by, because companies issue bonds, hence they are governed by Companies Act. In unlisted securities, they are mainly governed by Companies Act only and not by SEBI. Coming to the listing, it's self-explanatory whether this is listed on the NSE or BSE platform. It is important for every listed instrument to take prior approval from the designated stock exchange. Whereas when it comes to unlisted bonds, these are not listed on the exchange and no such approvals are required from the stock exchange. Now, what is the benefit of this, right? Because if it's traded, because both are traded, then what is the difference? The difference is because of the exchange, you get the chance for liquidity. Today, that is very important. A lot of you have raised this query कि हम bond तो खरीद लेंगे, बेचना रहेगा तो आप कहाँ जाएंगे? So yes, आपका broker आपको मदद करेगा, but eventually her bond settle होना चाहिए exchange के through. And that is where exchange plays a very, very important role, wherein they provide liquidity to the bond. A lot of you have raised this query कि हम equity के जैसा stock market में trade करते हैं, वैसे ही हम bond में क्यों नहीं कर सकते? तो answer is absolutely yes, आप कर सकते हैं. Problem is education. That is what we are here to do. So we are here to help you understand how you could look at doing this. So the more and more people participate in this, the more and more liquidity will. If you get to know the amount of money that is lying in FD, which is completely illiquid, अगर आप आज FD में invest करते हैं और आप अगर FD तोड़ने जाते हैं, तो FD तोड़ते हैं आपका रिटर्न अगर समझो 6% है, तो 5.5 मिलेगा, 5% मिलेगा. वही चीज आपको bonds में नहीं होती है. You can trade it in the exchange. It can trade at a premium. It can trade at a discount because it is a financial instrument. All financial instruments will have a risk, just like equity. आपने कुछ equity खरीदा आज 100 रुपए का, कल 110 भी हो सकता है, कल को 99 या 90 भी हो सकता है. Fortunately, bonds में इतना ज्यादा fluctuation नहीं होता है, लेकिन it is driven by a lot of factors, governments, repo rates, inflation, rate hikes by government, by RBI, anything. So, but there is liquidity, where exchange plays a very, very important role because majority of these bonds are traded or they are settled through exchange, either through an example like NSE or through NSECL, which is the clearing corporation arm of NSE, which is a subsidiary of NSE. So these are tradable, which is over the counter again. In unlisted, there is liquidity, but relatively less. So today there can be a possibility that you invest in unlisted bonds, but there can be a possibility that you will not get an exit. Hence, it is very, very important to ensure that when you're buying a bond through anybody, that person gives you that support. Hence, the knowledge of understanding the risks of every financial product is very, very important. So whenever you're doing that, do ask that in case if you want to exit, will you get the support, right? These are again tradable on the OTC, so they can be traded. Coming to the next aspect, when it comes to minimum investment, a public issue of bond like NHAI ka InvIT, a lot of you guys have invested, some of you guys were contemplating of investing or want to buy in the secondary market. The minimum investment in that is as low as 10,000 because वहां पे face value 1,000 रुपए का है. उसी तरीके से historically मुतूत का IPO आया है, नावी का IPO आया है, नावी FinServ. These bonds you can invest in the secondary market and primary markets mein it's normally 10,000. There is something such as, which is one of its kind in the world, which exchanges and SEBI has come up with, which is called the electronic bidding platform. This is not there anywhere in the world. If any issuer or any corporate अगर पैसा रेस करना चाहता है तो इलेक्ट्रॉनिक बिडिंग प्लेटफॉर्म के थ्रू वो ये बॉन्ड को पहले डिस्क्लोज करता है एक्सचेंज के ऊपर. मतलब एनएससी का ईबीपी प्लेटफॉर्म कहलाया जाता है. ईबीपी प्लेटफॉर्म पे आते हैं. अगर 100 करोड़ के ऊपर एक कॉर्पोरेट रेस कर रही है एक साल में, तो दे हैव टू एक्चुअली गो टू ईबीपी एंड एक बिडिंग के जैसा एक्सचेंज का प्लेटफॉर्म है जहां पे इन्वेस्टर्स कैन बिड फॉर दीज इन द प्राइमरी मार्केट ऑल्सो. जैसे काफी इन्वेस्टर्स सेकेंडरी मार्केट में खरीदते हैं, यू गाइस कैन ऑल्सो इन्वेस्ट इन द प्राइमरी मार्केट. हाउएवर यू जस्ट हैव टू रजिस्टर विद एनएससी और बीएससी एंड यू कैन बिड फॉर दीज bonds in the primary market itself if you wish to, right? Depending on whatever is the minimum investment size, that every issue changes. However, that is only there in listed securities. That means the price discovery, the coupon या जो return आपको मिलने वाला है, वो इन मार्केट डिसाइड करती है कि ये नहीं है कि अगर एक इशूअर को अगर 6% पे रेस करना तो वो रेस कर सकता है या 7% पे रेस करना तो कर सकता है. वो एक इंडिकेटिव रेट लेके आएगा एंड या इंडिकेटिव रेट भी नहीं लेके आएगा. इन्वेस्टर्स डिसाइड करेंगे कि एक कॉर्पोरेट को क्या रेट पे ये पैसा देना है. Then obviously whoever is the best bidder in favor of the company, they will get majority of the share. Unlisted securities में ये applicable नहीं होता है. Coming to the penalty clause, जब भी एक listed bond issue किया जाता है तो इसका 4 दिन के अंदर listing किया जाता है. That means primary में अगर कोई issue आया है तो within 4 days they need to list it. If there is no listing that is done, then there is a 1% additional penal that is charged to the issuer, which ensures that listing हो और आपको liquidity मिले. So that is one of the clauses that is there in the listing agreement that is applicable by exchanges and will be penalized to the issuer. Coming to the taxation. Now, a lot of you people have asked in terms of whether TDS katta hai, nahi katta hai ya nahi hai. So just to give you a quick, this is not a tax advice. I would highly recommend everybody because we are not an advisory firm. This is purely education purpose that we're doing this. TDS is not deducted when it is a listed bond issued by a corporate. Corporate NCD hoti hai. So then in that case, no TDS is deducted because they have under section 193 of IT Act. Interest is taxable as per the tax slabs unless until you are investing in a tax-free bond issued by NHAI or PFC, REC or any of the historical bonds that have been issued. Otherwise, interest is taxable as per tax slabs. You can plan your tax better by speaking to your chartered accountant. Short-term capital gain tax up to 12 months as per the applicable tax slabs. And LTCG under 112 IT Act, which is more than 12 months, is 10%, which is without indexation. Coming to the unlisted securities, rest everything being the same. The only difference is that TDS is deducted. So in case if any of you do not come in the interest tax slab, then you have to continue to follow the process of filing your returns and claiming this TDS in case if you're not in the tax slab.
From an exchange perspective, I will just want to talk slightly upon, why listing of NCD bonds offers more comfort and transparency to the investors who think of investing into the bonds market. We've seen that investing in bonds offers a diverse portfolio, and investors who are looking for a diverse portfolio obviously look at various alternate asset classes, and bonds becomes a choice for investments in such diverse portfolio cases as well. So what is that investors should look out for when they are investing in bonds is, whether it's a listed or an unlisted bond. And I'll just talk to you about, what is it that is there for a listed bond. Firstly, like all listed bonds, all bonds which are listed onto the stock exchanges are under the purview of SEBI, who is the capital market regulator. So that offers a lot of comfort to everybody that yes, it is a regulated space that these bonds are being issued under. Exchange is the frontline regulator, and hence, while both the exchanges will give in principle approval, or the designated stock exchange will give in principle approval for listing of the bonds, they will ensure adherence to the SEBI prescribed guidelines. So that is one comfort which an investor can take care, is that exchanges, while they're pursuing the documents and while the issuer is thinking of coming up with an IPO or a private placement of debt, will have adhered to the regulations, which is the NCS regulations that is prescribed by SEBI, and which SEBI has been evolving over a period based on the market feedback from time to time. So the other important thing that an investor gets assured about the fact is that yes, there is an exchange who is monitoring compliance of the listed bonds of the listed issuers, and that offers again a higher degree of comfort and transparency to the investors into the bond market. So if you were to ask that, what is that an exchange does to ensure that the listing of bonds is as per the prescribed framework. So what the exchange will do is, first, when the initial documents are filed with them, there is a timeline that an issuer has to adhere to, and that is the timeline that is prescribed in order to ensure that investors are aware of what the information is being given to them, and all of them have access to that information, and they're able to take an informed decision on that. So they will what an exchange will do is, whether this issuer is allowed to do a debt issue, and whether it's private placement or a public issue, is there any proceedings against him which prohibits him from accessing the capital markets or the debt market. So all those checks and balances would be done. The information document that has been shared would have been studied through to ensure that fair and accurate information is being given to the investors, and based on that, the in principle approval will be granted to the issuer. Once the in principle approval is granted, the process of bidding will start, where the process of, I would say, bidding or book building, whatever is the case, will start. Again, like it has been described to you, that this is a transparent way of discovering price. So you may have a bidding process where the price discovery will happen, or the coupon discovery will happen, and similarly you will have a book building mechanism also, which will offer in the public issue. So again, there is transparency in the way the coupon has been arrived at, or the price has been arrived at. And post listing, once the bidding process is done, exchange will also ensure through the clearing corporation that all the funds and the securities are transferred as per the requirements and within the time frame that has been prescribed by SEBI. So again, that assures guarantee that anybody who has put in a bid and has been selected to get the securities will get the securities, and the money will go to the issuer. So again, that part is taken care during the listing process. And once all this is found to be proper, the final listing approval is provided by the exchanges, which ensures that the bond is listed and now available in the secondary market for investors who did not participate in the primary market. And once the bond is listed, again, the other question that arises, that how do I monitor information? How do I see information about a listed bond? So again, there are continual disclosures which have to be made available. And based on that, the exchange will monitor the compliances. The investors will be aware of the information, and the exchange will monitor compliances. And in case of any breach of compliances, the exchange also will be imposing actions onto them based on what is the standard operating process. It could be penalties, it could be caution, it could be advice, and that would again be across the issuers. So investors are again confident of the fact that exchange has been working very transparently across the issuers on the compliances or lapses, if any. So again, it offers trust, confidence, and transparency to the investors who are investing in the listed bonds. Can we move to the next slide? Yeah. So what is that investor can take advantage of by listing on a by investing in a listed bond is, you will be able to see the financial results as per the prescribed timelines, quarterly or annually. The annual report will be available. Corporate governance reports have to be published, so which again offers a comfort to the investors about the governance of the issuer being monitored and being reported on a regular basis to the exchanges. The annual interest payments, your utilization of proceeds will have to be disclosed, which again offers the investors an update on how the funds have been utilized and where it has been and whether it is for the purpose that was meant for or not. Investor complaints, if any, would again have to be intimated to the exchange, so that gives again a lot of comfort that yes, things are going fine and we don't see investor complaints, and as per the process that has been and as per the terms and conditions that the issue came up with are being complied with. And other disclosures would be prescribed by SEBI from time to time. So again, the reason of a listing of bonds or listing of any security onto the exchanges is the prominent thing is that it offers investor a lot of confidence and trust. It is meant that information asymmetry is not available, is not there. Investors are able to take information at par, take a very informed decision, and there is a fair and transparent way that the exchange is doing the whole the process about listing, about continuous disclosures. So I think the advantage about listed bonds is abundant. It is about you looking at that information and taking an informed decision. Sunny, over to you.
So, Rasai, what you're trying to tell us that basically listed bonds with the help of an exchange is empowering investors to make more informed decision. If today I'm invested in a bond of a company, and in case if there is any difficulty that the company is going through, or if they are going through a better time, a much better time today, जब भी एक equity में invest करते हैं, हर एक investor जाके उनके disclosure जाके check करता है कि हाँ ये कंपनी के results अच्छे हैं, कंपनी के results बुरे हैं, या ये कंपनी अपग्रेड हुई है क्रेडिट रेटिंग में, इन्होंने पैसे किधर लगाए हैं, ये पैसे रेस करके किधर यूज कर रहे हैं, ये सब उनको देखने मिलेगा एक लिस्टेड बॉन्ड में एक्सचेंज के थ्रू. So they will be able to make more informed decisions. So a lot of you guys have raised queries कि why a bond is trading at a face value which is face value से नीचे क्यों ट्रेड कर रहा है. जैसे कि एग्जांपल एक 10 लाख का फेस वैल्यू है लेकिन एक बॉन्ड ट्रेड कर रहा है 9.5 लाख पे, तो क्यों ट्रेड कर रहा है. So this is where you can get your answers, because that from these disclosure norms you will actually understand that something is not right or something is right about the company. Sometimes a 10 lakh rupee bond can be trading at probably 11.5 12 lakhs, which is trading at a premium. That means you can actually get capital gains out of it by selling it in the secondary market, right? So
so Sunny, just to add
yes,
to what you said is that one very important thing is that the issuers of the listed bonds or the investors of the listed bonds, an important thing is that information has to be displayed to the investors. There is no choice that an issuer will display only a good news and not a bad news. So there is a specific set of information that has to be, irrespective of whether it is good or bad, it has to be informed. But
it is non-discretionary for the issuer कि अगर खराब हो रहा है तो भी उनको disclose करना, अच्छा है तो भी उनको disclose करना,
which you may sometimes be deprived of if you are going for unlisted security.
What are the risks? Is bonds also not risky? Every investment asset class is risky. Real estate is risky. Gold is risky. Or not risky. I would say gold has risk. Real estate has risk. Equity has risk. The same way bonds also have risk, right? These are liquidity risks, fraud risks, market risk, and credit risk, right? I'll not take too much of a time because a lot of people have raised queries and we want to move on to that. We have 20 minutes remaining and we have over 100 plus queries, which we will try to run through. Liquidity risk is very simple. Whether एक bond में liquidity है, कल को आपको बेचना रहेगा तो help होगा या नहीं. Fraud risk, जैसे कोई company में अगर कहीं fraud हो गया तो then that risk you will always run. So it's very wise, very choose wisely. Market risks, अगर कल को गवर्नमेंट ने रेट बढ़ा दिए, कल को गवर्नमेंट ने रेट कम कर दिए, तो इस टाइप का मार्केट रिस्क, यील्ड बॉन्ड के प्राइसेस प्लस माइनस हो सकते हैं. And the other thing is credit risk. अगर कोई company is going through a little bit of financial difficulty time, then there can be a possibility कि उनकी credit rating downgrade हो जाए और आपका bond शायद discount पे trade होने लगे. So these are some of the risks that is always attached to a bond.